Hey, I've got something fun I want to share for a minute. It'll cause you to think a little bit, but it's some new information that kind of got my attention, and I thought I'd share it real quick. And a fellow that I had met and got a little business coaching from, I'd say, but he really opened my mind about how I handle some of my financial resources, and it's resonated with me because of the journey I've been on since I lost my corporate job the middle of 2017. And he asked 5 questions. And now that we have a new president, and there's a lot of things in movement now as it comes to laws that are changing, probably especially tax laws, he asked these 5 questions though. He said, Jeff, think about this. He said, number 1, will we have higher taxes in the future? What's your reaction to that? Number 2, will we have lower benefits in the future? Number 3, will we have inflation? Number 4, will we have increased volatility? Number 5, he said, 2 parts. He said, what will happen if we live too long? If we live too long. The second part of that, he said, what will happen if we outlive our money? And someone else, I heard a comment, they said, you know, in the future, it's even current today, but in the future even more so, people are going to be really long on life and really short on cash. And people should be very proactive in finding the best resources to help them best accumulate and best utilize all that they accumulate. And utilization can be even more important than accumulation. And I can explain what I mean by that. I'm not going to do it right now, but I can explain it really well. Because people are jaded by that. We're taught in this current time frame, maybe since the mid-'80s, to put as much money as we can away in your employer's sponsored qualified plan, the 401k, the 403b, the 457, your self-directed IRA, and defer the tax. And you remember, defer doesn't mean don't have to pay it. It means just postpone it. And you will pay it in the future at some tax rate that we don't know what it's going to be in the future. They sold us on the idea that, well, you'll be in a lower tax bracket when you're retired. I haven't met one person that wants to retire into a lifestyle that's less than what they were living at when they received their last paycheck. Think about that one for a minute. Most everyone wants to improve their lifestyle through their life. Maybe they cut their expenses, but how do they improve their lifestyle? How do they improve how their retirement money spends? Because here's the final little question I'll ask you, and I'll ask you to ponder it. And he asked me, he looked at me, he said, I got to know this, Jeff. You know, answer this for me. You know, and looking at what you've got here, he said, is there, just tell me, I got to know, is there somebody at the Internal Revenue Service that you are so in love with? Someone at the Internal Revenue Service that you're so in love with that you just want to leave them and give them a whole gob of your money? Huh? What do you mean? And he explained the example of a 401k plan or an IRA that someone's accumulated a bunch of money in. And he used a simple example of $200,000. And he said with the new law that was voted in at the end of 2019, called the Secures Act, and I can tell you more of that, you know, an inheritance of a 401k IRA qualified money today is not such a great thing as it was before December of 2019, because the inheritor prior to December of 2019 could stretch withdrawing that IRA that they inherited. And now they have to inherit it within 10 years. And whatever hasn't been withdrawn by the person that inherited it within 10 years is forced out, and the government takes all the taxes at that year's income tax rate. So imagine when you're drawing money out of a 401k or an IRA, 403b, whatever you take out that year is added on top of whatever your income was for the year. Okay, so if you inherited it and you're an income earner of a 75 grand, 100 grand, 200 grand, $500,000 a year, whatever tax bracket you're in, when you add that withdrawal to it, it could bounce you to another tax bracket. Let alone, like the question I asked earlier, are taxes going to increase in the future? And, you know, from my point of view, it's kind of like, duh. A lot of younger people may not think that and understand that, but those of us that have been around, and if you look at the history of taxes, federal income tax, it's at some of the lowest rates it's ever been in the history since it was started in 1913. If you look through the World War I and World War II periods, you know, the top tier tax rates were crazy in the 80-90% range. And now it's like 37%. And what's going to happen to capital gains taxes now? What's going to happen to the estate taxes? I hear Biden's going to reduce it from $11.5 million per person of a married couple down to $3.5 million. So a lot more money is going to be scooped up in taxes on estates that are inherited. So a lot of things in flux need to be considered, but one of them is how to insulate yourself and get money from a pocket I call the forever taxed pocket, and extract it and put it into a specially created deeper pocket with insulation in it that is never ever again taxed and is only accessible by you and those you designate, your spouse, loved ones, those that inherit it. And it's interesting things to talk about today, but my point back there about is there someone that you are so in love with at the Internal Revenue Service that you want to leave them a whole bunch of money? Someone leaves even a $200,000 401k and multiply it if your number's bigger. And the last to live is the spouse, the woman, and she passes away, and the children, let's say it's two or more, inherit that $200,000. You got to understand the way taxes are going in inherited monies. That $200,000, $100,000 for each child, about $40,000 of that's going to go to the government. Of each $100,000, $40,000. So the child gets $60,000. Child B gets $60,000. They each gave up $40,000 in taxes. The IRS, add those two numbers together, received $80,000 of your $200,000 401k money, IRA money, that you left to your two children. How do you like that? The IRS got $80,000, your kids each got 60. Would you want to do something about that? My God, if there were a way, if there were something you could do that would change that, my God, wouldn't it be worth at least 30 or 40 minutes to find out about something like that? That's a question of the day. I challenge you to go back to this message and review it a few times, review parts of it, because there's something in here that's going to resonate with you if your mind is open, if you're considering these topics and issues. I could tell more in places I've been today, people I talked to, but it's a real deal. It's time to get honest with yourself and make sure your assets are in the right pocket, right? You want to move as much as you can from the forever taxed pocket to the never taxed pocket. And I've got the experts, professionals, and the knowledge base and resources to show a person how. It's up to you. Hey, you have an awesome day. Thanks for watching and listening. If you like what you've seen here, share it with a friend, like it, and comment. Most grateful for that. Have a great day. I'll talk to you later. Bye for now.